Hi there traders, this is Steve Miley for FX Explained, and now for another one of our regular MacroWatch weekly updates on what's happened in the last week on the macro fundamental, geopolitical, central bank side, and then also taking a look forward to the week commencing 16th of December. Well, very much trade talks in the UK election result, affirming the underlying risk-on theme that we've seen across markets over the past week and likely to extend that into the seasonal holiday period and through year end. Let's wind back actually a week before, the Friday the 6th of December, when we had the November Non-Farm Payroll data, particularly strong NFP data at 266,000 jobs added with expectations of 187,000, and also the unemployment rate at 3.5% in the US, matching the lowest jobless rate since 1969. This left markets going into the beginning of last week on a positive footing with us within a risk-on theme, equity markets looking firm and strong, and that was reinforced on Tuesday when we had the signing of a new trade deal between the US, Canada and Mexico, replacing the old NAFTA agreement and again helping equity and stock markets higher. The attention then turned to the Federal Reserve in their last FOMC meeting of 2019 on Wednesday. As anticipated, no change in interest rates, though the Fed maintained a dovish stance, indicating rates would likely remain on hold throughout 2020. And this again helped stock markets, stock averages in the US nudging higher and globally nudging higher by this outcome. The focus then switched into the second half of the week on Thursday the 12th of December to the UK general election, and then we had an emphatic majority for the Conservative Party predicted by the exit polls at 10 p.m. on Thursday the 12th of December, and then that was confirmed later as we went through into Friday with the Tory Party, the Conservatives, having an overall majority of 80 seats in here. This saw the pound rally strongly against the dollar, GBP USD above 135 briefly, hitting its highest level since May 2018, with the euro against the pound plunging to levels not seen since 2016, although the pound did correct slightly back lower on Friday. Also, this left us in a risk-on move, which was then complemented on Friday by the agreement of the Trade 1 phase deal progressing to an accord now between the US and China. An agreement has been made incorporating a delay on tariffs that were due to take effect on December the 15th. And with some of the details still to come through in here, US negotiators reporting in here that significant reduction in tariffs are to come from the US, whilst China is committed to buying large quantities of US agricultural products. Again, this buoyed and helped equity markets higher, stock markets higher, whilst we saw the yen sell off, the safe haven yen selling off, dollar yen punching higher, nearly hitting the 110 level, and European, UK and US government bond markets all selling off to lower prices and higher yields. The week rounded off in here with the US House of Representatives Judiciary Committee coming to a decision on and agreeing articles of impeachment against the president, with a full House of Representatives vote expected this week. But as yet, this is still to have little impact, given that the two-thirds majority is required to impeach the president, and at the moment it seems the Republican-controlled Senate is going to be voting with the president. So what do we have for the week ahead, the week commencing the 16th of December? Well, later in the week, on Thursday, we're going to have the expectation of the Queen's speech to kick off the next session of Parliament with the new majority Conservative government. Prime Minister Boris Johnson has committed to quick and significant progress on his Brexit deal, alongside a range of other new initiatives that markets will watch with interest. We're also waiting for the vote in here at the House of Representatives. No date on that at the moment, but an impeachment vote expected into the second half likely of this week. Elsewhere, we also get on Thursday both the Bank of Japan, we get the Bank of England, and then on Friday, the People's Bank of China. So the interest rates decision, probably the main focus on the Bank of England, possibly responding to the certainty that has come from the general election result. So we'll certainly be watching out for that as we go through Thursday. And then it's a heavy data week. We get Chinese retail sales and industrial production Monday, global market manufacturing services and composite PMI data also that day. The RBA meeting minutes Tuesday alongside UK employment report, US industrial production also Tuesday. Wednesday brings the German IFO plus UK, Eurozone and Canadian inflation reports. Thursday sees the Australian employment report, UK retail sales, and as mentioned there, the BOJ and BOE meetings and interest rate decisions, whilst Friday brings the PBOC interest rate decision plus UK and US GDP. So it's a busy week on the data front. I'm going to wish you all not only a great trading day, but a great trading week. And don't forget to join us for our next Macro Watch. So traders, don't forget to catch us on the next FX Explained Macro Watch and all the great content on fxexplained.co.uk.